wanted to talk about kind of the topics on there that I think people are going to be most interested in is kind of what's the starting capital, profit split, drawdown limits, profit targets, time frames, and account scaling and payouts. So that was kind of a mouthful, but basically all those things.
Fantastic. So let me briefly explain to you what happened when someone actually applied for the funded trader program. Okay. When a trader applies for the program, he will be contacted from one of our talent acquisition team. They were just there behind me. And over phone call, if of course they're not based in London, so they cannot come for an in-person interview. So we get in touch with them, we interview them, and once they pass the interview stage, they receive a contract, which will be a self-employed contract that they will receive. They will need to review it. If they're happy with that, they can sign it. And it's only at that moment in time that there is the payment of the fees. We will go back to the payment of the fees later, so I can explain to you why there are fees involved in the program. Once that the bureaucracy has been taken care of, the traders straight away receive the login details for the account. They start with a $15,000 account. Everyone starts with $15,000, regardless of the previous experience. It can be someone that has 6 months of experience, someone of, 16 years of experience. We want to give to each and every one of the traders the same opportunity to be successful in the market. So everyone starts from that balance, that account balance. From that point onwards, the job of our traders is actually quite straightforward. They need to make 10%. As soon as they meet the target, we share profits with them 50-50, and we double the account size. It's a rinse and repeat process up to $500,000, and there is no time frame. Because here at AudaCity, as I was saying, we are traders first and foremost. So we do realize that there is already the market that puts pressure on the traders. And there is no reason for us to just add up. So it can take a week, it can take 1 month, it can take more than that. It's completely up to the traders' performances. We don't get involved with that.
Awesome. What about the drawdown limits? What do they? How do those work?
So the drawdown that we give our traders is a maximum of 10%. It's an absolute drawdown. So it's not trailing and it's not floating. And if they respect the rules and the risk parameters that we give them, that they actually agree when they sign the contract, I can actually say that it's quite unlikely for a trader to hit the drawdown limit before they can make some profits, because it's an absolute drawdown.
Awesome. And so if they're managing their capital correctly, like you said, they'd have to have a pretty big losing streak to hit their drawdown limit.
Exactly. And it doesn't happen that frequently. Of course, I just wanted to clarify that even in case something happened and the trader hit the drawdown limit, of course, they will not be liable for any loss. And they can apply for a second chance. Our risk management team will review the account. We'll see basically what happened, if it was because of, particular market conditions, or, they will basically review the account. And it's going to be their decision if giving a second chance to the trader or terminate the agreement.
Got it. Yeah, that was going to be my follow-up question, which is something that we hadn't talked about yet. But so a trader, worst case, if they do have something unfortunate happen, they can have a conversation with you guys and possibly
100%.
apply again